Hi, Joe Cantu here, and today is April 3rd, 2023, and the broad stock market is steady.
Welcome to Retirement Tactical Money Management. Joe Cantu, Chief Investment Officer of Cantu Tactical Wealth Management, is your host and has over 30 years of experience in the retirement money management profession. He is a West Point graduate with a master's in business administration and has worked for 3 of the largest Wall Street firms as a stockbroker and portfolio manager.
Hi, Joe Cantu here. Today is April 3rd, 2023, and the broad stock market is steady. I wanted to put this podcast and video out because it appears that this may be the bottom of the market and it's beginning to move up. So let's get started. So the stock market, as measured by the Dow Jones Industrial Average, is entering its 4th day of a possible stock market move. Now, many of you watching the market today, you may see that the S&P 500 is down, but yet I'm saying that the broad market is moving up. So why is that? It's because the S&P 500 is weighted by size, and unfortunately the largest companies in the S&P, Google, Microsoft, are all technology companies, and tech's moving back today. So in some ways, when you look at the S&P, it's a little bit again like the NASDAQ, that it's tech weighted. But yet today I'm seeing the broad market move up. So let me talk about that just for a moment. So the earnings, so many Wall Street analysts have been noticing that the earnings reports remain steady and not moving down. Now, I've been talking about that for about 2 years, saying that inflation doesn't really affect earnings that much. It affects it a little bit, but not that significant. So I believe this is what sparked the quote broad market into being bought and prices moving up. So in essence, another way to say it is I'm seeing the breadth of the market move up as a group. And that's nice to see today. Now let's talk about some economic indicators. Now, several economic indicators are coming out and finally showing signs of a slowing economy. For example, today the manufacturing numbers came out and showed a slight slowing, but yet manufacturing was strong. It was strong overall. Now, what about recession? Well, it's very interesting that the forecasters who last year were predicting a recession in first quarter of 2023 and second quarter of 2023 are now not saying that. It's because they were wrong, and I actually said that last year, that was probably not going to be the case. And so now those same forecasters are moving the idea of a recession up to the third and fourth quarter of 2023. But I still don't believe we're going to be moving into recession. And so what is fueling the economy and the stock market? It is ironic that the U.S. remains strong despite forecasters creating gloom and doom of business ahead. Now, what are the forecasters missing? They are missing the consumer buying power. Now, it's interesting about this consumer buying power because it's like the big elephant in the room that you can't see around it, but it's right in front of your eyes. But yet, from a measurement basis, there's not a lot of economic indicators that measure this buying power. But what's interesting even more about that is that it's coming from an ever expanding labor market. So as I mentioned before, last year I said that the reason I don't think we're moving into a recession is because of the strong labor market. We're at the highest employment in I don't know what, 49 years or 50 years of our U.S. economy. And again, it's interesting, the buying power. Somebody said to me, the millennials and the boomers are continuing to buy and continuing to spend, and so because of the spending power, it's creating a strong economy moving up. Now let me talk about energy just for a moment. So energy it seems to have been it seems to be trading in a range of between $65 a barrel and $85 a barrel. Unfortunately, the United States administration, this current administration we have, it has significantly reduced their energy purchase price from the Saudis, or reduced the purchasing of energy from the Saudis. Now, my expectations, again, about a couple of weeks ago, that it was going to force the Saudis to, number one, cut production, but in cutting production, it will raise prices for West Texas Intermediate crude, for the oil prices per barrel. And that's exactly what actually happened today, or over the weekend, is that the Saudis cut production, which, is causing the price of crude to move up. Now, again, I think it's trading right around $80 a barrel. Once it hits 85, it may move back down. I don't really know, but it seems to be trading in that range. But it's funny, it's the same situation with natural gas. I mean, looking at natural gas, it's at an all-time low right now. But I assume the same thing's going to happen with that, maybe with the natural gas companies here in the United States, is that they may have to cut production. And when they cut production, you should see nat gas prices start to move up. So my expectations are that the stock market will move up, as we are now seeing today, moving into the fourth day. And it's nice to finally see that it's a broad stock market move. You're seeing many different types of companies moving up. Again, I believe that's because the earnings are staying steady and flat and not moving down, which is a surprise to many young analysts, who are 20 years my junior, and they're not seeing those prices moving down. Again, we're entering a earnings season. Remember what happens in each earnings season. It seems like the stock market goes up as the earnings are released from some of these companies. Now let's talk about our actions here at Cantu Tactical Wealth Management. So we remain equity heavy, and we have begun adding fixed income into the portfolios because with rising interest rates, now fixed income looks very attractive. Now, another thing is we have added some exchange traded funds, some ETFs, into the portfolios. Now, these ETFs, they select stock positions based on the cash flow of these companies. And what I'd like to point out is we're not completely out of energy. Actually, more than 30% of these selected exchange traded funds that we have in the portfolio have energy positions in them. So again, I'll say it again, over 30% of some of these selected ETFs that we have in the portfolio that are based on cash flow have energy in them. So for those of you who are watching the portfolios, you may wonder why I'm not buying individual energy positions. And the reason is I actually have energy already in the portfolios through these use of these other exchange traded funds to take advantage of that. But what I wanted to do is to diversify that position, since I didn't want to be, betting on, red, 15 red on the roulette table. I wanted to diversify the position on the energy spectrum because I know that energy is kind of trading in that range between $65 and $85 a barrel, again approaching $80 a barrel now. So anyway, I just did want to point that out. This concludes my presentation. I did want to put this out to everyone to maybe give you some good hope on markets ahead. It's nice to see again a broad market rally across the board for stocks. So I have some disclosures. Oh, last thing I wanted to mention, I do have a YouTube channel. The name of the YouTube channel is Cantu Tactical Wealth Manager is the name of the YouTube channel. Cantu Tactical Wealth Manager is the YouTube channel. And of course, my podcast, you can just put in Joe Cantu in your iTunes or Spotify, and then you'll see all my different podcast episodes. I have some disclosures at the end Please take a listen. Thanks.
Welcome to Retirement Tactical Money Management. Joe Cantu, Chief Investment Officer of Cantu Tactical Wealth Management, is your host and has over 30 years of experience in the retirement money management profession. He is a West Point graduate with a master's in business administration and has worked for 3 of the largest Wall Street firms as a stockbroker and portfolio manager. Over 10 years ago, he created Cantu Tactical Wealth Management, which actively balances and selects investments based on a tactical approach rather than the traditional strategic management method. Instead of the buy and hold philosophy, he believes in the pursuit of finding investments showing momentum, performance regardless of the direction of the market. His experience includes IRA accounts, 401k rollovers, trusts, endowments, defined benefit plans, 403bs, and 401k plans. Additionally, he served as a night college instructor for seniors, teaching high net worth retirement and estate planning for 14 years. Podcast views and personal opinions are for educational and entertainment purposes only and does not constitute a recommendation. Investing has risk of loss, and you should consult with your own advisors for any financial decisions. Cantu Tactical Wealth Management is a fiduciary, registered investment advisory firm in the states of California, Florida, Georgia, and Texas, providing pure, independent advice and money management.